Hey everybody, this is Jim at SP500chart.com. It's about 2 o'clock on Sunday afternoon, November 29th, 2015. I hope you had a great Thanksgiving weekend, and I hope you're looking forward to what this next week brings you. And we're going to take a look at the chart, see what happened in this shortened week. We only had 3.5 days of trading in the past week, and I think that's sort of evident in the chart because nothing really much happened. But before I get into it, I need to remind you, as always, the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I can't stress that enough. I'm just a guy who draws lines on charts. So let's educate ourselves and see if the chart is worth paying attention to or not. Starting out here on a 30-minute chart, we are looking at roughly the past month and a half or so of trading. And just as a brief recap, we'd made a head and shoulders top right here, left shoulder, head, right shoulder, broke the neckline. Once that neckline broke, we knew that there was a minimum downside target. And when I say minimum, I don't mean that's the lowest it could go. I mean minimum in terms of distance from that neckline, okay? There's no minimum. It could have gone to zero, okay? But when I talk about minimum targets, I'm saying it either reaches that target or beyond. So if we're talking about a downside breakout, we either reach that target or keep going lower. But the minimum amount of downside we would expect is measured from that neckline where we get the breakdown. And that told us we should be expecting about 2022, 2023, and we got 2019 and change. I think that's pretty strong stuff as far as the predictive nature of these charts. Now what happened? Well, all of this last 2 weeks off of that high that was back in the early part of November, all of that was taking place in a broadening pattern, which I've pointed out time and time again is really unusual. And this was indeed unusual. But you still look at it and you say the same kind of truths apply. And that is, you find your your line of resistance on your different points of resistance, and then you say, well, when we break out over that, then this downtrend is likely over. I'm never going to say the downtrend is over. It's likely to be over. Remember, nothing in charting is 100%. I know sometimes it's tempting to think this is a beautiful chart, it cannot fail. There is no such thing as a chart that cannot fail. So I just want to remind you of that. So anyway, we come up off of this low, which by the way tagged almost exactly where our midpoint rally was in this sort of a double bottom thing that we had going on here in August and September and very early October, which broke out in about the middle of October. So double dip. Once we got over this point right here, we knew that should serve as support. It was resistance here. It was resistance here. We got over it. Support, support. So that worked out beautifully. That, of course, that was last week. So what happened this week? Well, frankly, not that much. Here's our week of trading right here, starting on the 23rd, 3.5 days. Basically, it looks like we're just kind of consolidating. We had some weakness there on a Tuesday, but even that bounced at a spot where the chart said we could very well bounce. I thought we would probably not get underneath this line right here, but once we did, you can see that this support line picked things back up, and we rallied back, got over this short-term trend line, and then spent the rest of the week from about Tuesday lunchtime on going sideways. Again, here is that extended neckline from our head and shoulders top, a fairly small one, and you can see that even on Friday we bounced on that line. And really, just to cut to the chase, just to make this as simple as I can, we've got another resistance line right here. And this particular resistance line looks to me like it's sort of got a neckline sort of implication to it, meaning perhaps another inverted head and shoulders pattern. Left shoulder here, head, right shoulder. Now you might say to yourself, well, this right shoulder sure took some time. Yeah, but keep in mind that the time that these patterns spend developing, I think it's a function of the number of shares that have to trade, and we're talking about the 29th being the day before Thanksgiving, and the 25th. What am I? It's not the 25th being the day before Thanksgiving, and then the 27th the day after Thanksgiving. There just wasn't that much volume going on. So what I think we should look for in the week coming up here is if we get over this resistance line right here, then we have another short-term target. And how do we get to that target? Same way we've done it with the other ones. You measure the depth of the pattern from the neckline to the lowest point of the head. Remember, shoulder, inverted head, shoulder. Only to be confirmed, however, when we break out over this line. So if we were to break out over that, let's say at the open tomorrow, then we would be looking at a target of about 2117. Okay? And if we get up to 2117, does that mean anything in the big picture? Well, it means we're getting right up to that larger neckline right here from what is potentially a fairly complex inverted head and shoulders pattern right here. And the reason I have some hope for this panning out and taking us up into the 2300s, again, upon a breakout from this resistance line right here. The reason I have hope of that happening is because it looks now like we are forming an inverted head and shoulders shape now, and with the minimum target from this double dip right here of 2188, that tells us, well, we should be getting up over this line. So what I'm looking for in the weeks ahead is to see how much time we spend over here, hopefully never getting lower than 2020, and at some point breaking out over this trend line that is currently at about, where are we now? 2113. So I think that's the picture. That's the thing to keep an eye on. I've mentioned also that there is a bearish possibility. And the bearish possibility is we simply fail to get over this line. This little double bottom thing right here fails to produce its target of 2188, and instead the wheels come off the market. We break through this long time support right here, then we come back down to this line drawn from the lows of October of 2014 as well as the lows of September and August of this year, and we break through this, at which point we have to be honest with ourselves and call this a head and shoulders top. And if it's a head and shoulders top that we're looking at, then we would be looking at a minimum target in the low 1600s. But because things seem to be stacking up in favor of the bullish movement, we'll wait until we start to see the wheels come off this market, I think, before we look in detail at this other possibility. There are often times in the market where there are dual possibilities. You can look at a chart and it's almost like a Rorschach test, you know, the ink blot test, where a psychologist shows you the ink blot and asks one person, what do you see? They say an angel. And they say, what do you see? They say the devil. Well, it's all but what is your predisposition? And that's what the ink blot test reveals, the Rorschach test. It reveals your predisposition towards what are you wanting to see. So right now, I have to be honest with you and myself. I'm not wanting to see anything. I am long this market, having come off of these lows down here, but I'm open to anything happening. So big head and shoulders top or decent sized inverted head and shoulders continuation. If it is a continuation pattern, then there's a certain beauty to it in that if we break out over this line, that means we should be setting up for another tag up here on this rising resistance line. So this could very well happen within the context of everything that's been going on for the past 6 years. So guys, I think that's going to be it for today. There's your weekly review. The week really wasn't that much happening, just kind of staying put, and we'll see how we kick the week off tomorrow. And until then, let's just be thankful that well, we got a lot to be thankful for, not just the stock market, but our friends, family, and our health. And so anyway, I'm thankful for you for taking time out of your day to watch this and for your very, very kind support. Take care. Bye-bye.